Welcome to Richard Suttmeyer's 4 in 4. 4 blips on my radar screen presented in 4 minutes or less. My first blip looks at the yield on the 5-year U.S. Treasury and the Fannie Mae spread. The yield on the 5-year has declined from 3.75 to 3% mid-June to mid-July. This should be resistance. The spread on the 5-year Fannie Mae debenture began the year at 51 basis points. This spread widened to 118 during the Bear Stearns bailout. This spread was widening last week as share price for Fannie Mae cratered. On Friday morning, this spread was about 100 basis points, but ended the week at 77 as the stories broke Friday afternoon on the preview of the Ben and Hank show that would debut Sunday evening. The Ben and Hank show got bad reviews when presented to Congress on Tuesday, and this spread ended the day at 85 basis points. My second blip discusses the de facto nationalization of Fannie and Freddie. Given Hank Paulson a blank check to buy equity-related Fannie and Freddie issuance is de facto nationalization. Raising the credit line by an unlimited amount is also de facto nationalization. The Ben and Hank show does not help the mortgage market. It helps global investors. Our trading partners own $1.3 trillion of Fannie and Freddie securities, and Chinese government has $375 billion of these. Fannie and Freddie are supposed to help fund the mortgage refinances and help homeowners get new mortgages. Their problems with loans already on the books prevent this from happening. The 30-year fixed-rate mortgage may be down to 6.14 from 6.30 from a week ago, but it was 5.25 in January. Fannie and Freddie shares are on the mat and could be down for the count, as shown on these charts. Remember that many equity fund managers cannot own a stock trading below $10. My third blip looks at gold, crude oil, and the Greenback. Gold's latest trek to return to $1 per ounce stalled at 989.6, as my monthly resistance is a line in the sand at 991.8. Crude oil reached a new all-time high at 147.27 on Friday, between my weekly pivot at 145.56 and weekly resistance at 148.93. Was profit-taking by pension funds the catalyst for a 10-point swing on Tuesday? We don't know, because the CFTC does not track commodity investments, just speculative and commercial open interest. I show a daily chart for the dollar versus Japanese yen, which stayed below its 200-day simple moving average. The euro reached a new all-time high this week, and the British pound is above its 200-day. My fourth blip looks at the monthly and weekly charts for the Dow Industrial Average. The 120-month simple moving average at 10,563 is the key support. My annual support at 10,747 should prevent a close below the 120-month, at least in July. The weekly chart shows the 200-week simple moving average as resistance at 11,690. If you have any comments or questions, shoot me an email, gmcreports@aol.com. That's today's 4 in 4. Enjoy your day.